Hey guys, it's Luron here again and welcome back to my channel. Guys, in today's video I'll be going over 4 stocks that I have on my watch list. Matter of fact, I already took some positions in these stocks, and if you're looking to trade alongside me, you have until Monday, maybe Tuesday, where these stocks will give you great opportunities to get in if you choose to do so. Now, the 4 stocks that I'm looking at, Jack Henry and Associates, so that's ticker JKHY. I'm also looking at Vrtx Pharmaceuticals, VRTX. I'm looking at STRA, which is Strategic Education, and I'm also looking at Tesla. I know Tesla's been on fire lately, and it's on everyone's watch list lately. So I'll be giving you guys my review, both technically and from the fundamental standpoint, as to why I'm taking these trades. You guys will see my mindset, my rationale, and I'll give you guys the psychology that I look for when making these key plays. So if you're someone that's looking to make 300, 400, 500% return on your money, you certainly don't want to miss out on this video, because that's the type of returns I strive to make in my option trading. So whether you're new to trading or you're a seasoned trader, but you're not making these type of returns, then it's a no-brainer, guys, that you want to stick around to the end of this video, because at the end I'll also give you guys one bonus stock that I have on my watch list, but it's not ready to be traded now. It might be ready in another week or a week and a half. So you certainly don't want to miss it. Stick around to the end and you'll get that bonus stock that I'm looking at, guys. So let's jump right into it, guys. Remember, if you're new to the channel, please subscribe, smash that like button, leave me a comment below, guys, and especially the like button, guys. You know, that one helps with the algorithm, so it helps the channel to grow, it helps with engagement. Stick around, guys, and we'll jump right into the charts where I break everything down for you. Hey guys, it's Luron here and welcome back. So let's jump right into the charts, guys, to show you guys exactly what I'm talking about with these 4 trades. So as I mentioned before, we're looking at JKHY, Vrtx Pharmaceuticals. We're also looking at Strategic Education. We're looking at Tesla. And that's the 4 trades I will be discussing here today, guys. So let's jump right into it, guys. So the first one is Jack Henry and Associates. As you can see here, this stock, you guys should see the pattern by now in terms of the type of trades or type of stocks that I like to trade. So I usually trade solid fundamental stocks. So this stock is solid fundamentally. If you look at the history of this stock, it's just uptrending all the time, right? It forms wedges, breaks out, form wedges, it breaks out. Forms wedges, breaks out. This is the COVID crash, but as you can see here, during the COVID crash, this thing crashed and just recovered, right? It just didn't got affected much. But as you can see here, since August of this of last year, the stock has been in a decline, and we're looking at 23% down from August high to the lows of today, and it's 155 days, which gets past my minimum 90 days for these large wedges. So as you can see here, the wedge is being completed right now. We have some resistance point touch. We have support touching as well. So right now the stock is down at the primary support level in my technical analysis. The lowest the stock is allowed to go is to this bottom line. See this wick from this doji here? That's the lowest. So let's say the overall market becomes weak in the next week or so. It's okay if the stock gets to this level, but it cannot open nor close beneath this line. If that should happen, any positions that you have open, you need to exit that position, because it means that this stock is just folding and it's going down. So that's the first thing I want to get out of the way. So that's your risk. So, but it's at the primary support level. In my opinion, if the market overall remains steady, this stock will move to the upside. So it's a high probability that this stock will move to the upside. So I already entered here. We had one time it touched, second time it touched, and it confirmed this is a support line. So that's a 2 candle that I use to confirm my support levels. You see here, 1, 2, 3 connection points. It held there, held there, held there, and then I would come here. It's at this primary support level and it's holding. So that's my confirmation that it's It's a support level. This is the key support level. So I'm buying here. My target is 160. You see, earnings is coming up on the 9th of February. There's no weekly options on this particular stock. There's only monthly. So the option trade that I took is it expires February 19th, which gives me a ton of time, guys. I like these when it's at key levels and I have those a long time to play with. So I'm expecting another week, 2 weeks the most, but another week at a minimum, this thing will move up to 160 easily. The next play is expected to move higher and kiss this line again. So once it hits 160, I'll get out. I'm looking to 3 to 4x my investment on this one. So like I said, my risk, I like to get in at the bottom here, guys, because my risk is very low and my reward is very high. You can see that, guys, risk to reward. Some people like to trade in the middle here for a stock. I mean, I don't know if it's going up, I don't know if it's going down. My support is all the way at the bottom here, so that's a lot of risk not for a lot of reward to the upside, especially when you're trading options. So that's something I want you guys to take away from this video. Risk to reward. The closer to the support you can trade, the lower your risk is. So we got a wide open reward to the top, but a very small risk. Like I said, if it opens or closes beneath this line, we're out. So let me get out of the way right away. So that's it, guys. My target is 160. Let's look at some of the fundamental stuff. As you can see here, we had some upgrade January 11th, which is just earlier this week, and they're calling for 165 on this stock right now. So definitely it's targeted to go higher. Finviz is saying 174, which is even higher, even bullish, even more bullish on this stock. This stock has great sales. Look at the sales here. It's not super stair-stepping, but it's going higher and higher. We have great EPS, and then the forward 12 months sales, we're looking at about 1.7 billion, which is 1.71 billion, which is a little higher than we're seeing here right now. So EPS and sales for this information technology company, I see they also got some great news where they hit a great milestone here. See, Jack Henry reaches milestone of 150 banks and credit unions moving network infrastructure to its hosted network solution environment. So this company is hitting some milestone. They're adding more banks. They're adding more credit union to their clientele, which is great news for this stock. So, like I said, it's bullish, and it's one of those stocks that decline. As you can see, after COVID, it went up, and then it just declined since August. So it's not like some of the names like Facebook or Apple or even Tesla that is just been up. These are the stocks we'll see huge drop in the coming weeks to the next couple of months. So this one has been washed down already, and it's time for it to get a boost to the upside. Now, if you're trading stocks, this is still a good buy point. If you're not trading options but you're trading stock, it is a good buy point, and we can expect this to break out to this wedge and move higher all the way to about 170 or so if you're trading stocks. But like I said, I'm an option trader, and I'm going to get in here and get out here at 160. It's a short play, but because you have the leverage with option, it multiplies your money much faster. And I have until the 19th of February, which is, guys, a month plus out for it to get there. So the last time this thing touched the primary support level, you see here, in 3 days it moved from 148 all the way up to 163. So that was a big move in 3 days. So just imagine I have a whole month for it to get to 160. That will get there. If we have an action like this where it just gaps up pretty quickly, then I'll be out of this thing maybe at 160, 163 in sometime next week. That's my plan. If it breaks down on me, I'm out. So that's my analysis, guys, on Jack Henry. Let's see what Market Beat is saying about this stock. Right now it's a hole on Market Beat, and we're looking at a 177 as of today. And if you look at the 180 days, they're already at 168, 173. So the number is pretty steady, and it has a 15% upside. So we're still looking positive overall for Jack Henry. Let's move to the next one, guys. Vrtx. Let's put that one in here. Vrtx. So for VRTX, it's a similar play, guys. We have this stock is a fundamentally strong company as well. Like I said, it's a pharmaceutical company, so everything is dependent on their drugs and everything that they're producing. So far, the news are mostly positive on VRTX. Analysts upgraded recently to 250. Look at the sales, guys. 2015 all the way to 2019, we just stepping. This is the ones that I really love to see, when the sales are going up stairs, literally stepping. So this is pretty good sales. I like to see the sales going up. The EPS stepping as well. Everything's in a positive direction except for these 2 years. But 2017 all the way up here. It's an S&P 500, so we know it's a legit company. Target price 285 from FinViz. Analysts are calling for 250, 287. So from a fundamental standpoint, this thing is, it's doing really well. Some of the news here, I won't go through those news, but I've done that research already, and we have a lot of positive news from Zach. We have positive news from Monthly Fools. Most of the analysts are calling this one as a positive move to the upside. And like you can see here again, my wedge, we have 1, 2, 3 connection point. We're waiting for that next connection point here with the resistance line. We had multiple touches on the key support level. As you can see, let me zoom up here. I have one line here. If the market becomes a little bearish, then this one is allowed to go all the way down to this bottom line. But any open or close outside of this line, we certainly want to get away from this one. Earnings is upcoming. February 3rd, we have earnings. So usually these stocks, when they're great fundamentally, they like to run up just before the earnings, which is just 2 weeks away. So I got in on this one. My contract expires on the 29th, I believe, and I also have some for the 5th of February in my RRSP. So my strike on this one is 235, which is very conservative, because easily this one will run to 240 before the earnings. This will run up here, probably kiss this line, pull back after earnings, and then break out to hit the sloping target here. So this is a very nice play as well, guys. And if you look since July, this one has been down 32%, and it's down for 32% in 184 days. So that's a very long time, and it's been down in this wedge formation. So I believe this one is moving to the upside. Again, my risk is very small, but my reward is great to the upside. If it breaks down on me, I'll exit. And if you were trading this one as well, you should do the same. This is your risk, very low risk, but high reward if you're trading option. If you're trading stocks, this is a good bet as well. But if you're trading stock, my recommendation to you would be wait after the earnings. And if the earnings are good and it's breaking out to the upside, then you buy it and you ride it up as it moves higher. That's my recommendation for VRTX, guys. Let's see what the guys over at this one is saying at Market Beat. VRTX. Let's see what those guys are saying there. So for Market Beat, let's check the analyst rating. So this one is currently a buy, and wow, look at this guy. 30 Wall Street analysts are looking at this one. So the higher the analysts that are tracking the stock, the more you know that it's a stock that is heavily watched and heavily traded as well. So for the past 180 days, it's a buy, it's a buy, it's a buy. The consensus rating scores at 283 out of 3, which is very high, and they're calling for 289 as of today. There was a 290, 295, so it hasn't changed much, but it's a 289. You have a 28% upside on this one right now. So that's why I like this one right now, guys. If you look at the FinViz technical analysis chart, it looks like it's breaking down, but I don't follow these technical analysis because they're automated, right? They're just computer generated, and they put these lines in. So if you're you're basing your trades based on these technical analysis, not just from FinViz, from any computer generated program, then you're doing yourself a disservice in getting accurate technical analysis for your trades. So although I like FinViz, this is one thing I don't follow in FinViz, these lines that they produce there. Again, I showed you guys this already. The fundamentals are solid, sales and EPS. Now, if you have the free version of FinViz, you won't see these bars that I'm showing you here. It's not available for the free version, but I have the paid version, the Elite. So I can see these great sales and great EPS. Now, a lot of you guys might not want to invest in FinViz. I'm going off topic here, but if you don't have this, I don't know if there's any other program that shows you these bar charts for sales and EPS. And fundamentally, these are the main things that I look at. There's other things I look for, but they're not as important as these because I trade mostly growth stocks. And for growth stocks, these are the things I'm interested in. EPS, sales. So that's just a sidebar for you guys to take away, which is a key piece of nugget information there, guys. So yes, this one is sitting on the primary support. I expect it to move higher. So that's it for Vrtx, Extractica. So strategic education, not Extractica. I don't know where I get that from. Anyhow, this one is being done. So this is a company that has a bunch of like universities and colleges that run online services, like Capella University, and let's type it in here, STRA. The company, yeah, they have a bunch of degree programs like University Strayer University, Capella University, non-degree programs. So tons of stuff that you see where you can do online colleges like Jack Welch Management Institute. You can do your MBA, you can do bachelor's degree, different stuff like that online. This company owns those online university, a lot of them. As you can see here, the big thing here is a low float. You see 22 million float. So this is huge, guys. When it's a low float, it means that the stock can move very quickly. Like this can be here today and tomorrow you can wake up and it's at 120 because it doesn't take a lot of shares to trade or move it very fast because it's a low float, right? And the float can rotate and things like that. But pretty nice analysts upgrade chart. You see everything here is either green or in black or gray. That's a good sign. You see we have as of September 105, 107 as of December. Decent sales as of late. Due to the COVID-19, sales has increased for this stock. You see we're sitting right now for 2019 at 997 million. And the sales is 1.02 billion. That's a forward, most likely for 2020. Because this company did decently during the COVID, because everyone is taking online education during that time, right? So this company is expecting increased sales, increased revenue as a result. So you can see here we have we have many touches here. This is the resistance line right there. We have some support lines running to the bottom here, guys. This one confirmed the support here, here again. And now it's making its way to the upside. There's no weekly contracts available for this one. So I already have a position open here, and you still have opportunities if you're looking to trade this one within this zone. Because like I said, it's a low float, so you can wake up next week and then this thing just moves here in one day. And it's a sloping target. You see we have 1, 2, 3, 4, 5, 6, and it's sloping. So technically, this thing will be going up to 115 to hit this line at some point. That's where this stock is going. So I already took my position here today. My risk is right at the bottom here. Anything opens or closes beneath this line, I'm out of it, guys. That's my risk. I'm out of the trade. But my expectation that it moves higher. I think I have 105 and 110. That's the two strikes that I bought on this one. Usually this is the target, but I like to go 60-70% of the target area. So I don't want to overstretch myself too much. So I usually be a little more conservative and buy strikes that are 60-70% of my overall target area. This is a great one because let me show you here. The decline from back in June, we're looking at 55% decline. And it's 228 days since the decline of 55%. Remember, nothing changed fundamentally about this stock, right? Or about this company. Nothing fundamentally changed, but the stock took a hit and went down 55%. So just imagine that, guys. A stock is fundamentally sound, I mean, there's risk because people believe that some analysts believe that once people start returning back to work, back to the office, back to university, on campuses, there'll be less people enrolling in colleges, right? Online. It'll be back to this, whatever ratio they were before COVID. But that's still up in the air, guys. I mean, a lot of people might just say, you know what? Maybe online education is best. I don't want to go back to a campus. They've gotten used to taking online education and things like that, and it becomes the model going forward. But nevertheless, this thing is down 55%. It's at the key support level. This is the time to buy it and ride it up to the upside. So like I said, I already took a position here, so I expect this one to move higher. Earnings is all the way February 26, so that's some ways out for us to know more about the company fundamentally after they report earnings. But from a technical standpoint, this thing is primed to break higher and move higher. And I showed you guys what's your risk, right? If it breaks down, that's your risk you want to get out. If it breaks to the upside, yes, expect it to hit this line at some point. So that's it for strategic education, guys. And the last one here, but not least, is Tesla, the mother of all investment for the past year or so. If you're trading Tesla, guys, let me get you guys some perspective here with Tesla. Show you from the start of 2020. If you had bought Tesla in 2020 at the beginning of the year, this thing is up 989%. So if you bought $1,000, you got $10,000 if you got $1,000 invested in Tesla. So it'll just 10x your money easily if you bought just stocks. But I don't trade stocks, I trade options, right? So but look what's going on here, guys. I track this stock like forever, since its inception. This stock, I have wedges drawn on this stock to see how it behaves. Like I said earlier, the rear view mirror is clearer than the windshield. That's a quote by Warren Buffett. So when you look back on stocks, you get to know how the stock behaves in the past, and it helps you predict what the stock will do in the future. So that's what I do, guys. You see the stock, wedges, breaks out, wedges, breaks out, wedges, break out, wedge, breakout, wedge, breakout. So all these wedge breakout in 2020, I did trade these when they break out, obviously. And the last wedge breakout was November 17th. And if you see the length of this breakout, let me show you this, guys. The length of this breakout is 99%. Never in this stock's history, when it broke out, it went up 100%. You see 65% on that breakout. We had another one here of 90%, and so on and so on. So this stock is way overextended right now. Even the RSI is showing about 82 right now. So this stock is in trouble. As you can see here, once you start seeing these gaps, that's a sign that the stock is climaxing. We're having a buy-in climax. So investors are starting to, usually when investors want to sell their position, they start to push the price up higher to get people to come in. You see a lot of more news coverage on the stock. That's because they're trying to bait the average investors to come in and buy more so that they can take the other side of the trade. When you buy, they'll be selling. The more you buy and the more they sell. Now, if they should just sell, the price will just drop significantly. They don't want to do that. They want to get the best possible price when they're selling this stock. So you'll find that this stock will start to level out. You see these type of wicks that is going on here, guys. Look at these. You see any much wicks here? No. One, you got a doji, you got a wick. Right now you got a bearish engulfing going on here right now. This is a bearish pattern, guys, where you have this black red candle wrapped around that green candle, plus it's a shooting star doji type play. There's all sort of bearish sign on Tesla right now. We have a doji, we have a shooting star, we have a bearish engulfing. This thing is destined to fail right now. So mark my word on this. Tesla will be back to about 600, 650 in the next, I would say, 2 to 3 weeks. I mean, it could be a month, or it can just be a week where this thing just offloads, basically. But now it's in the S&P 500. I don't know if it'll behave any different than it did in the past, but you can expect this. Look, when it runs up here before, look what happens here. 1, 2, 3, 4. 4 days, and the stock was down, like 30%. Look at that. 34% in 7 days. So stocks, they take long to go higher. This is 22 days, but in 7 days, it's back down to that. So also we have here the stock rising 59 days, it rose, 99%. It can take 1 or 2 weeks and it'll drop, 30, 40%. So that's what you can expect with Tesla in the next month, guys. It can be even sooner, but I'm telling you, don't be a fool to push your money into this stock right now to the upside. I mean, it can become, a lot of people can still buy it up, and investors can allow it to run to get to that psychological, $1,000 mark, and then it can pull back. But this is setting up right now for, you can get a small pullback, then a push back up for a double top, and then fail. There's so many situations here. But for me, I trade wedges. So for me, when this drops, I'll give it an opportunity to dance around, form a wedge again, and when it's ready to break out again, I'll be trading it again. So for me, this is nothing. This is just wait and see what the stock does, but I certainly wouldn't be buying any calls right now because this stock is clearly climaxed, and there's not much positive on the upside. It's overbought, and it's time for it to collapse. If you look at the SPY, if you look at the SPY too, the SPY has been up for a while, guys. Look at that. The S&P, it's up 17% in 77 days. This thing is overbought as well. So if we get a big pullback to test this line, if possible, the 363 level in the next couple of weeks, that will be huge, guys. So that's what I wanted to talk about in this video, guys. And yeah, you want to make sure you're keeping your eyes out. You see all the FANG stocks are breaking wedges. This is what I wanted to show you guys as the bonus in this video. The FANG stocks are breaking down from major wedges. If you look at Apple broke out, but it's coming down as well. If you look at Amazon, it's breaking down on the wedge. Expect this to be down in the next couple of months. If you look at Netflix, it's coming down as well. If you look at Google, it's way up there. There's some room for it to drop. And if you look at Adobe, it's already broken down from the wedge and it's coming lower. So there's lots to decipher in this market, and you certainly want to make sure that you're only putting your money in the key plays, not those stocks that have run up and then it's time for them to investors are rotating their funds into stocks that are beaten down with upside potential. So I'll wrap things up in this video, guys, but that's what I wanted to go over in this video. Those are my plays for the coming weeks, for the coming week actually, and I give you guys some bonus information regarding the FANG stocks. So I'll wrap things up here. If you're new to the channel, make sure to subscribe, leave me a like, smash that like button, guys, so we can grow the channel, we can help with the algorithm, and we can get more engagement on the channel, guys. So until next time, take care.